Hello YouTube, it's Steve here. It's been a few days. Um, so we had an interesting trading day. We had the CPI report as well as the EIA for energy stuff, and so far the bulls have managed to hold on. So looking at the swap to going long on ES the other day, we are still going pretty strong now. We are up around pretty solid amount, just under $2,500. So fantastic for there. In other news, we've got our total equity up above 100 grand again, which, as you recall, before when I was following a script, it wasn't triggering properly, and so basically just ended up losing just about every trade that it was doing because it wasn't exiting at the right times, wasn't entering at the right times. So just bad timing all around. We went down to all the way down to 59,000. And so yeah, now we are up to break even and then some. So we'll see how this goes moving forward. Moving on to gold. Gold is finally starting to agree with me. As you recall, we were getting kind of, it was just a little bit of a whipsaw in there. I'm going to swap back over to 1 day now because the 8-hour time frame has only been tested on the indexes so far, at least as far as what I've actually put into practice in the real world. Um, but my oscillators work pretty decent and everything else on the daily anyway. So anyway, moving on, we are up $500 on gold, which probably doesn't completely erase the losses that we were taking down here, because it's been pretty choppy here. And as I mentioned before, I'm not really a gold trader to begin with anyway. I know a few guys that do trade it, but every instrument is different, and you kind of got to get a feel for all of them. Um, Moving on to the Russell, which again is, I've mentioned, I do not really trade the Russell. Um, and speaking of which, I'm going to swap back over to 8 hours real quick here. Okay, so that's the reason why we're long, is because I was taking a signal off the Russell. Although, if I was going to be going off that, then I probably should have entered long here when there was actually a cross. Um, but not a big deal. It's just a little bit of a reverse. Um, but the Russell has been kind of, for a while now, kind of stuck in like a range. Um, the way the S&P just kind of soared last year and in 2020. The Russell, yeah, it had its moment towards, in October, but for the most of the rest of it, it was just kind of all over the place. Uh, Good for trading, not so much for investing. My passive long-term portfolio only has a very, very small section with the small caps under one of the Vanguard ETFs. So that's how I'm handling that. I don't really worry about it too much because it's like 2% of my total equity, so it's not exactly something that I'm gonna lose sleep over. Like I could tank by like 20% tomorrow, and I'd be like, that's uh, that's certainly something, but I wouldn't have lost that much. So we are gonna stay long for now, um, just because we've also moved over, and this moving average that I've got here is a non-standard one. It's a running exponential moving average, and it's also coded to change the color based on slope. I have a similar one running on my live account over on Trade that I use for my day trading. Although that one is with a couple of Hull exponential moving averages, which some of you may or may not have ever heard of. Um, but they're kind of nice for gauging what the overall trend is just by looking at it and seeing the color. I don't make signals off of these. I just kind of like having it on the screen, basically. I like making my charts aesthetically pleasing. Alright, moving on. We have copper, which did phenomenally for us today. Moving back over to 1 day. So, as I've been covering for the last few weeks, we've been in this sort of trading range here, which is a little bit broad until you really look out and see the big picture about how far copper really ran over the last year and a half. Uh, it went right on up, and as you can see, we came up and we were hovering around this support level, crossed above that, had a big rally day, hit that one, and then just could not maintain it. So we'll see if we can actually maintain this upward momentum, maybe go even higher. My indicators down here are both still bullish on the topic. Although copper's a little bit of a weird one for me. I trade this one much more on macro factors and price action rather than indicators. Just because, as you can see, there's a lot of sideways movement, and if you're just using indicators, a lot of the time you're really going to get chewed up. So you want to be careful with that. Especially, I recommend using trailing stops on that one. But to recap for anybody who has not seen, my indicators down here are ones that I have heavily modified myself. This one's based off of MACD with a whole bunch of other stuff added on there. And this one was based off of the stochastics oscillator, but I use it completely differently, where the classical use of that is that when it is up above the 80 level, it's overbought, and so you should short it. And when it's down below the 20 level, it is oversold, and you should short it. However, when it's above those levels, I have it coded so that it will be shaded in, and we do not exit the trade until it crosses back under, or in this case back over. And the reason being for that is, for example, right here, we go right on up into the overbought level with a close at 4 and 63.15. If we were to short there, then if we had any kind of stop in, that would get taken out pretty much immediately, because nobody wants to lose this much money. That's a pretty big move, even if it does come back down. So we would be better off with just waiting and seeing what it does. It's more of a personal preference to me. Everybody trades differently, but that's how I do it. Oil continues to do extremely well for me, which, as you can see, the way that oil moves has done extremely well for basically any type of indicator that I've ever made. So like, if I really wanted to, I could trade this off the moving average. Wouldn't be that efficient, but I could. If I wanted to do my heavily modified MACD, I could, although this one I actually programmed in the parameters for specifically for day trading the oil. It takes in some different calculations into account. Normal MACD takes in the close price. This one's actually based on the forget exactly what it's called. Oh, on balance volume. Okay. Alright, there's a bunch of settings built in that you can use on that one. Which I wasn't the one who originally coded this thing. Either of these, I just heavily modified the parameters inside the actual code itself so that they work more to my liking. Stochastics, as you can probably tell, I cranked up the period length as well as the smoothing factor on just the K line, but not the D line. MACD, I changed the parameters all around. There's a lot that's different. It's very, very different, but basically I changed stuff around to suit a certain purpose. Like, it's just a tool. You don't want to use indicators as a crutch, but if you program them right, you can, in general, rely on them. Like, that's what you can see right here with just my heavily modified stochastics. Would have told you to go long at like 67 and 54 cents, and then shorting again at $80.86, which in this sort of situation, when I was actually trading in this area, I made sure I actually set my stop up here, which is 5 points, which is a lot, but when I did that, I was factoring in the fact that I had been riding this thing all the way up, so I had plenty of room to use my profits to soften if I was wrong and continue to rally or whatever. Which you can see we had a bounce here, but that was just a bull trap, and then immediately it just tanked right off a cliff. And then we went ahead and switched to being long here, and we've been long ever since. So moving on to natural gas. Now, I've been saying for a few weeks now how natural gas has been stuck in this little pit here, this base. and like I entered that position a while back here, so you can imagine I've been watching this thing and going, when the hell is it going to figure out where it wants to go? Well, today, pretty much, because now we're up by 10 grand, so fantastic for us. And we're going to stay long because I don't know how hard it's going to rise. I have some suspicions that the demand is going to stay high because of things over in Europe, as well as we all remember what happened with the ice storm down in Texas last year, because the top producers of natural gas in the world are the United States, followed by Russia, Canada, and a few other countries. But yeah, a lot of people think of Russia as the big natural gas producer, but actually it's the United States. And so that's part of why when Texas kind of got kicked in the shin last year, why it rose so much more than it usually does. Because my normal strategy for natural gas is around the end of spring, middle of summer, usually the June through July. Like I'll start accumulating a position. But this past year or 2 years now, was really, really weird compared to what usually happens. Because we go back even further, and you can see how it kind of came down after November, and then just kind of started like moving in a base, just like we have been. At the very end of July, like I was just saying, you start accumulating, and then it rises up high, and then of course you can follow the indicators here, although it's extremely, extremely choppy here, so that's not really something that I would like to do. That's why, like I mentioned, this is one of those things where I do it off of a macro strategy rather than indicators or even price action. Price action can be fine if you're doing day trading. Hell, indicators work fine on this if you're doing day trading. I like using them on a tick volume chart, which I actually just was working on the parameters for earlier. And so I think I'm going to be testing that out over the next week or so, see how much money I can make. Just trading one lot at a time, see how that goes. Yeah, this whole experiment here has made me just go, every time I look at this account, I'm just like, man, I wish that was some real profits, because the trades so far worked out pretty well. So yeah, no, we're staying long here on natural gas for so far. Moving on to bonds, I keep harping on the fact that I'm bearish on bonds. They finally kind of hit up floor here, which we marked all the way back here, that this is probably where it was going to bounce. It did, well, a little bit lower, but that's an even stronger level right here, because it really struggled to bounce off of here. And then we have a little bit of a bullish harmonic there, which I do not actually trade off of harmonics. I just kind of recognize the shapes at this point. So we're going to stay short for now. Trading T-bond futures has been one of the more surprising things on here, because I have like no experience with it whatsoever on my regular account. I usually pay most attention to the next one, which is going to be the 10-year. Next one, on the other hand, was like in this choppy range, not figuring out where it wanted to go this entire time, and I was just like, well, I'm bearish. My indicators are pretty much telling me that it's probably going to go down, and Powell is probably not going to raise rates because of the pandemic and all that. So turns out, no, my guess was right. So we are up 2 grand on that. On to silver. Silver, I'm much better at swing trading than gold. It makes a lot more clear, wide moves. It's a lot less choppy compared to where gold is. So we've had a gold signal for a little while now, and a silver signal, and we're going to stay long. Although we do have what looks to be an area of resistance here, which is in line with this area back here. These two candles here that kind of pop up and touch that level, as well as the bases of right before we have basically a bull flag, bull pennant, whatever you want to call it, and then plus this dip, which then bounced. So if we can cross above this level, I think that silver will rally, but we don't know. We won't know until we see it. So keep an eye on things. And that is pretty much it for now. It's been a choppy week, but the moves have been pretty long and wide each time. And so anybody that was trying to trade the trends, which is what I do on day trading, probably did pretty well. So far, I, on my live account, have literally not lost a trade this week. Last week I was around, I want to say a little bit above 50%, which is fine, as long as your risk reward is where it should be for that sort of performance. Um, like a lot of people who trade forex will do 1.5 to 1 or something like that. Um, I basically just use trailing stops. So a lot of the time, like what'll happen is I'll be right, but not right enough. So like it'll hit me out for like a loss of like 2 or 3 ticks, because it'll have gone like however many points in my direction, but then reversed by that same amount. So I've had that happen a couple of times when I've left trades on overnight. It's not a big deal. It makes my numbers look a little bit worse on the percentage wise, but the gains are much bigger, especially when I'm actually paying attention to it. Because, like I said, that was overnight, and if I had actually been at my computer looking at my indicators and stuff, I would have been able to close that out for a profit and then switch directions. Although, I'm just going to move this down to, let's say, 30 minutes. Auto fits the screen. Like you can see for the last few days, it's been pretty consistent on making nice big moves. And the thing about the way that I day trade is that I don't use time charts like this. Um, because time charts, you are at the mercy of time. And so, like, in a situation like this, yeah, you can make some money, but it's really choppy. Whereas with a time chart, it would look a lot closer to the 1 minute, where you can clearly see the big moves. But I don't like using the 1 minute because it's really choppy, so I use a tick chart. Because I like looking at the volume for most of my trading decisions. Excuse me. It shows you what's actually happening rather than what did happen. And so I like to make informed decisions based off of that. And as you can see right here, is around right at the close. That's a pretty big move. I know today that we had the CPI at, it was 8. Where's that on here? Right, I'm on a 1 minute, that's why. Okay. Silly me. Yeah, you can see how at right around 8 it just spiked and then fell and then was pretty much flat. So not really a big deal there, but that is pretty much just all that I really did today was just keep an eye on my trades. We're still going by the one contract per trade rule, following all of the rules of actually doing the trades. I haven't made a video in a couple of days because I haven't been feeling well, but I've been taking a look and seeing if anything needs to be adjusted and taking it from there. So see you guys, let's see, today is Wednesday, so yes, I will see you tomorrow and the day after. So have a good night.